If you want to know more about your closing costs when it comes to purchasing a home, you've come to the right video. I'm going to break down a recent closing that we've had, walk you through the closing disclosure statement so you know what to look for when you're shopping around for your home loan, and things that you really need to be aware of so that way you don't get hosed when it comes time to close on your house. If this is the first time you're checking out my channel, my name is Seanu Uyehara. I'm a branch manager with Geneva Financial, and we're helping you finance your homes all across the country. Whether you're a first-time home buyer or a seasoned investor looking to build your portfolio just like me, we got you covered. You can hit the description below for links to more information. And if you ever have any questions, you want my team to do a custom analysis for you, you can always send me an email and we will gladly be able to help you and make sure you are going in the right direction. Now, we always talk about how to find a good lender, things to look out for up front, getting pre-approved. But now what happens when you're actually in contract on a house? What happens when you're actually dealing with a lender and now you have to look at your closing disclosure or even your loan estimates just to make sure that you are getting what you were hopefully promised up front. Now, here's where the mortgage industry gets a really bad rap. Back in 2005, 6, and 7, leading up to the crash, the mortgage industry was the wild, wild west. You could buy a house without providing any documentation. If you had a heartbeat and a social security number, you essentially could get a mortgage. That is how easy it was to get a loan. And get this, when I first got into the business here in Vegas, all you had to do was pay about $185 and you got licensed that day. There was no testing. There was nothing that was done. You literally paid $180 and you were in the business and you could start writing loans. That's how insane everything was back then. And then you wonder why things fell apart. You wonder why there was so much fraud and the entire real estate and mortgage industry took a hit because of things like that. So now we fast forward to where we are today. In order to be a loan officer, you've got to pass not only a state test, but a national test. And you have to do continuing education every single year and pay your fees and dues just so that way you can stay in the business. Now, as you saw, the business changed drastically last year. A lot of realtors and loan officers got out of the business, which is a good thing because so many people want to get into the industry because so many people think what we do all day is fairly easy when there's actually a lot of strategy and a lot of complications that come along every single day in order to be a successful loan officer. The reason why I share this with you is because before the crash, there weren't many checks and balances in the industry. Today, there's many checks and balances that go on. There's a lot of regulation, so you as a consumer are protected. But I'm going to walk through this closing disclosure statement and I'm going to point out a few things so that way when you are shopping, you know what to look for and you know what questions to ask. So make sure you stay to the very end. And if you ever have any specific questions, remember, you can always send me an email and I'd be happy to answer them for you. So as we look at this closing disclosure statement, you can clearly see in the top left-hand corner, it's going to say closing disclosure. Many of us in the industry just refer to this as the CD. The CD itself has to be acknowledged by you as the buyer before you sign your final loan documents. So this is something where, again, when I talk about checks and balances, this is something that is that check and balance. So if your loan officer promised you a certain interest rate, promised you a certain payment, or promised you anything, this disclosure statement will be able to validate that. If for whatever reason it's not on there, that is your cue and your signal to ask that question. Hey, Mr. and Mrs. Loan Officer, why did you not quote me the 6% interest rate you promised me and now it's showing me 7%? Remember, if what you see on here doesn't reflect what your loan officer is promising you, you have to stop your process. You have to start asking questions. I've had a number of clients that actually close on their house using a different lender, and then they call me after they close and said, hey, can you look at this? And as I point out the errors, they wish that they would have never closed on the house, but now it's too late. So you have to ask questions. Now, I blacked out some of the information from our client, but you can see pertinent loan information here on the right-hand side of our estimate. You can see that it's a 30-year loan. We are looking at a purchase. You're also looking at it's a fixed rate mortgage. So again, if you are looking at potentially an adjustable rate mortgage or a fixed rate mortgage, it's going to reflect that right there. Also, if you did do an adjustable rate mortgage, you do have to sign and acknowledge what we call a charm booklet. So it's something that acknowledges that you know what you're getting into as far as an adjustable rate mortgage. Again, that wasn't available back in the day. And that's why so many people were taken advantage of using adjustable rate mortgages, not only because loan officers were greedy and they were being paid an insane amount of money to sell those types of products, but homeowners were also under false pretenses with the product itself, saying things like you can always refinance or you're going to sell your house for lots of money. So there's all these other things that went on, which there have been some of that coming back again. So just make sure you understand what you're getting into. You can also see this is a conventional loan. Okay, so now we're going to break down some of the nitty gritty here on this closing disclosure. So again, your sales price. Make sure you understand your contract. I've said this in a number of videos. So many times I have buyers that are just blindly signing and initialing a contract. You are signing a legal document. Understand what you're signing. So many clients don't even know what their closing date is, let alone all the other contingency dates that are very important on your contract. If your realtor does not explain that to you, you should ask them to explain you the contract. If they don't know how to explain it to you, any good loan officer should be able to walk you through that process. It's not that difficult. So make sure you are either talking to your loan officer or your real estate agent about what the contract means. There's no stupid questions, because if this is the first time you're buying a house, you do not even know what you're signing. So you want to make sure you know that. And if you're an investor and if you haven't bought a house lately, you should ask some questions as well. Don't be afraid. Don't have too big of an ego to ask those questions. You can see our clients putting $70,000 down, or 20%. That's reflected by our loan amount here. And our interest rate at the time that we closed this loan was 7.625%. The total monthly principal and interest payment is $1,900. And again, it's noted that it's principal and interest. That's not including our taxes, insurance, or if you have an HOA, just your principal and interest payment. And then you can see to the right, it's very clear that the column states, can this amount increase after closing? And the answer is no. However, know that your payment can potentially change if your loan gets sold to another servicing company or someone else picks up the mortgage. The two items that can change on your payment is going to be your property taxes and your homeowner's insurance. So if your property continues to go up in value, yes, your property taxes can also go up as well. And also your homeowner's insurance. Homeowner's insurance can change year by year, but that's also something you can constantly shop for. And most of all, pair it with your car insurance, or if you own other properties, the more lines of insurance that you have with the carrier, you typically get a discount. So you can obviously look at that, or you can even look at insurance brokers. They usually do a pretty good job of getting you lower payments and premiums for your homeowner's policy. Here's also a very big thing to pay attention to. Does the loan have any of these features? And you can see here the answer is no. So there's no prepayment penalty and there's no balloon payment. Two big things that, again, hurt a lot of people during the crash. You don't see too many of these features on any type of mortgage anymore, simply because that was some of the reasons why a lot of people couldn't sell their house, they couldn't refinance, or they were totally unaware of what a balloon payment was, and then it caught them off guard, and then all of a sudden they couldn't afford the house, then they went into foreclosure. You can see here on the Consumer Finance Protection Bureau website, what is a balloon payment? A balloon payment is a larger than usual one-time payment at the end of the loan term. If you have a mortgage with a balloon payment, your payments may be lower in the years before the balloon payment comes due, but you could owe a big amount at the end of the loan. So again, many buyers back in the day signed up for these types of mortgages so they can take advantage of a lower payment, assuming they could sell, refi, or do something with the mortgage, and then all of a sudden they got whacked upside the head with the balloon payment, and that was it. That's all she wrote. So now we're looking at the projected payments. So again, we have our $1,981 as our principal interest payment. Because we put 20% down, we have no mortgage insurance. And now you have our estimated escrow account of $202. That gives our total monthly payment of $2,184. Now you can see to the left under the estimated escrow account, this amount can increase over time. So they are noting that to you, that yes, it could potentially go up in the future. Here's another common question that comes up. Is my HOA payment included in my monthly payment? And the answer is no. So when you move into your house, keep an eye out, because you will get another bill from your HOA company, so that way you pay them separately. It does not get lumped into your mortgage. Here in Las Vegas, HOAs are super common, so you most likely when you buy a house, you will have an HOA payment. And again, this closing disclosure statement clearly states your property taxes are included in escrow, so is your homeowner's insurance, and your HOA is not. So you can see that the HOA on this house is about $78 that you can pay separately to the HOA company, whether you pay it monthly or you want to write them a check once a year, you can do that as well. So now we're heading over to our closing cost section where you can see we are estimated at a little over $8,000. This includes $4,500 in loan costs and about $3,500 in other costs, which we're going to get into that section as well. Included with the down payment, you have your estimated cash to close, gives us $69,000 for our client to bring that number to the table. Again, this number can fluctuate as you go towards your final signing, but this on your closing disclosure statement should be pretty close. It's not going to be to the penny because there's always a pad or some sort of extra fee that gets removed at closing. So typically you get a small amount of money back. Okay, so now we're getting into the meat and potatoes of your closing disclosure statement. This is where you have to pay attention. If you remember anything out of this video, it's this section I'm going to show you right here. So section A is your origination charges. This is where when you're shopping lenders, this is what you have to look at because most of the other fees that I'm going to talk to you about, all those fees don't matter because every closing is going to go through a title and escrow company, and those fees are determined by that company. So regardless of who the lender is, you're still going to have your closing go through a title and escrow company, depending on where you live, and those fees will be the fees. Many of you never ask about them. Many of you never even question them, which is funny because you question a lender, but you never question the closing company of why they're charging me certain fees, and you just go along with it, which I'll go into that a little later. So with this client, they did a 2-1 buy down, and you can see that they were charged 2.1% points towards the loan, but we got the seller to cover that for us. So this is where you hear people in the industry use the word points. All that means is a point is a percent. So that's kind of lingo that we use as far as are you paying points, meaning are you being charged any additional fees or discount points or costs to buy your interest rate down. With the environment that we've been in over the last year or so, many of you are paying points because you want to get your interest rate down or because the sellers are willing to credit you and pay for closing costs these days. You're using those funds like we did in this case to get our client a lower interest rate. In their case, they're doing a 2-1 buy down, so they'll get an even lower payment for the first 48 months. And you can see this lender has $500 for processing fees and $995 for underwriting fees. Most lenders charge some sort of processing and underwriting fee. That's pretty standard. There are some people that will waive their processing and underwriting fees if you're a veteran or maybe you are a teacher or something else. So you can ask those questions when you are shopping around. If not, that first box really determines what the lender's charging you. This is where I've seen some lenders charge an insane amount of fees to clients and they just do not look at this section. So remember the A column on your closing disclosure. Section B talks about services the borrower did not shop for. So again, you're looking at paying for your appraisal fee. Now, most appraisals are probably going to run you anywhere from $500 to maybe $700, depending on the size of the house, maybe the location. And it also depends on the market conditions as well. During COVID, appraisers were charging thousands of dollars to do appraisals on houses. And the crazy thing is they would put rushes on them and it would still take them 2 weeks. So this was a huge pain point for everybody in the industry because you wanted to refinance or you wanted to do a purchase. And there was a finite amount of appraisers in every single market across the country and they were overworked. So what they did was they cherry picked. They looked at the easiest, most convenient appraisal to be done and they would go do those first. If you're trying to buy a house in a more rural part of the country, which we had some clients, unfortunately, that were doing that, I had some appraisers were charging us $1,500 to do an appraisal, and it still took them 3 weeks to give us the report. So hopefully we never see that again because that was just a really frustrating time, not only for us as mortgage professionals, but also for those of you that are in the real estate industry. You know exactly what I'm talking about. And for you as a buyer, let me tell you, nothing is more frustrating than wanting to close on your house and you can't because no one wants to go do the appraisal on your property. So nowadays we're back in line. We're about $500 to about $700. Again, depending on the type of loan, depending on the house that you're looking to buy. There's also a credit report fee and a flood certification fee. Now, the credit reporting fees recently went up. They about almost doubled from what they were originally. So again, when the government likes to get involved into our industry, they always like to charge us more money. And with that becomes you as the buyer, you have to pay more to buy a house. So again, credit reporting fees back in the day probably run us $30-$40. Now you can see they're about $85. It is what it is. It's part of the deal. Now we're into section C, services that the buyers did shop for. So this is something that like I mentioned a little bit ago, most of you never ask questions about title and escrow fees, and you just kind of blindly go along with whatever your realtor tells you. Here's one thing you need to be aware of. It is your choice as the buyer to determine which title company you'd like to use. But here's what happens 99% of the time on every single contract that I've ever seen. The selling agent or the listing agent has a relationship because they do a ton of business. Typically, most listing agents do more business than buyer's agents. So they all run their business through one title company and they get preferential treatment because they're giving them hundreds of deals every single year. So they will put notes to the other agents that we prefer title to be with XYZ company. Now, what most buyer's agents do is just go along with that, or sometimes they write their own preferred title company in the contract. The listing agent will more often than not counter that with their title company, and the buyer's agent typically goes along with that simply because they want to get the offer accepted. This is why I always talk about having your agent negotiate for you. There's so many times I see agents just lay over to the listing side just because they want to get their deal accepted for their client. Title fees don't vary much from company to company. However, if you as the buyer are grilling me as a loan officer as far as what our costs and our rates and our fees are, why do you not do the same for the title companies? I bet most of you have never even thought of calling a title company to see what they charge or see what their fees are. So if you wanted to be more proactive, you could do that. You can find out what's the difference between title company A and title company B. More often than not, it's going to be service. The fees could vary. Yes, they certainly can. But I've never had a client in my 15 years shop around and ever tell me who they want to work with as a title company. Maybe you'll be the first. And if you do, send me an email or comment below. I'd love to hear that, and I'd love to hear how that plays out. So now we're looking at our total loan costs. We are combining sections A, B, and C. You can see the breakdown there. And now we go into other miscellaneous costs. So you have your recording fees. The deed needs to get recorded with the county. You have your prepaids. So closing costs, remember, it's not just what the lender's charging you. You also have some prepaids as far as your homeowner's insurance. So typically, they will charge you a 1-year premium up front. That way they have everything built into your escrow account. You can see here, this client went with State Farm. No mortgage insurance and any prepaid interest, depending on, again, the day that you close, because interest is accrued daily when you look at closing on a mortgage. Now, section G, you can see that there is an initial amount that goes into your escrow account. So this is some funds that go into that account, so that way when you start making your payments, there's already some funds in there. Now, every single year, your mortgage company, whoever you're paying your payments to, will do an escrow analysis. This is where they look at where your property taxes are, your insurance, and they determine how much money needs to be in your escrow account. Sometimes there's a shortage, and when that happens, they will send you a letter stating that you don't have enough money in your escrow account. You can do one of two things. You can either prepay the difference, so that way your payment does not change, or they will automatically adjust the payment to recoup the shortage in the escrow account. Your payment will then increase for the time being until everything's caught up, and then it can go back to being normal again. So I've had this happen to me a number of times, and I've always just written a check because the amount is usually a few $100. It's not anything crazy where I couldn't just write a check in order to get my payment where it needed to be. And then on the flip side, you can have an escrow account that has too much money in it. When that happens, the mortgage company will actually send you a check back with the refund. So again, you can use that money to prepay your escrow account, or you can do anything with the money if you want. It's your money. So now again, you can see some additional closing fees here. We have our HOA fees, home warranty. I would always suggest getting a home warranty because when you move into your house, especially as a first-time home buyer, things are going to go wrong. I've had my fridge stop working. I've had the garage door I had to fix. So the home warranty is a really great way to offset some of these higher ticket items. You pay a small deductible. It's usually 50 to 75 bucks. Someone comes out, they fix the item for you as long as it's covered, but more often than not, it's going to be covered. And it's just a great way to help minimize some of those expenses. That way you don't freak out being a first-time home buyer, having to fix all these things in your house that comes along with owning a property. You can also see here real estate commissions. So realtors are getting paid on their deal. Realtors also charge a transaction fee. This is also something that many realtors charge. This is something that houses your documents because they have a certain amount of time that they have to have things on file. This is where you can also negotiate with your realtor. You don't have to pay this fee. If you don't want to pay it, you can tell them, I don't want to pay it. They are making thousands of dollars. If they want your business, they can sure as hell cover a $200 transaction fee. This isn't something that you absolutely have to pay. This is where, again, it drives me crazy because as a buyer, you will just grill the heck out of a lender. But I've seen some real estate agents charge $1,000 for this transaction fee. And you know how much the realtor is making on the other end? They're probably making $12,000, $15,000. And then they're going to charge you $1,000, but then you get mad at the loan officer that your payment is $50 higher than what you thought it should have been. Doesn't make any sense. So make sure that you have that conversation up front with your real estate agent. How much is your transaction fee? And do I have to pay it? Or are you willing to help me and cover that? So it's not something you absolutely have to pay. Now, as we break down our initial loan estimate to our final closing, this is where, again, checks and balances in the buying process happens. So you can see on our loan estimate here, our total closing cost we estimated to the client was $14,000. A lot of times, many lenders will have systems generated where a lot of things get auto-populated when they trigger a loan estimate. So it's not going to be accurate to the penny, but the closing disclosure statement is going to be pretty damn close to what the numbers are going to be. Again, there's still a pad in there, but it's going to be pretty close. So when you get your loan estimate, don't freak out because the numbers will change. That happens on almost every single transaction. The loan estimate comes out, you acknowledge it. The CD, closing disclosure, comes out before you sign. You have to acknowledge it before you sign in order to move forward. So again, if you have questions, stop the process. Ask your realtor, ask your loan officer. Don't be afraid because not asking questions is only going to hurt you down the long road. And you can see on our initial estimate, we told our client you're going to be coming to the table with about $70,000. And our final number was about $1,000 cheaper than what we initially had informed them on. So you can see another summary of the entire transaction. This is everything kind of on one sheet that I just went through. Your closing disclosure statement is probably going to run you 5 or 6 different pages. It takes some time to go through it, but you can always save this video, or if you need a second opinion, remember, that's what my team and I are here for. Share this with a friend that's looking to buy a house so they don't get taken advantage of, and subscribe to the channel because that's how we spread the information out to the rest of you. And thank you so much, and I'll see you on the next video.